Be Frank!
Welcome to Let's Be Frank, the weekly podcast that gives a quick take on U.S. stocks from the perspective of a value investor. I'm Brian Frank, a professional investor with over 20 years' experience specializing in small and mid-cap value stocks. Every week, I'll cover what is working, what isn't working, and talk about the value we're finding on the hunting trail. Find out more at frankfunds.com. Now let's get to it. Today is Friday, July 10th, 2026, and the market is trying to make up its mind on abandoning momentum for value. High-flying memory company SK Hynix raised over $25 billion with its ADR listing, but in my view, this takes even more liquidity out of the AI trade. The lack of new highs in momentum names says to me that investors are having difficulty propping up these valuations while contributing to capital raises like Google's $80 billion equity offering and the SK Hynix ADR. I still believe value will lead in the next part of this cycle, because unlike momentum, value has the cash flow to support their stocks. That brings me to what worked in value. This week chopped back and forth between value and momentum, but I think staying the course worked well. With leadership ping-ponging daily, anyone chasing here could be hurt. Instead, I am being deliberate, following the fundamentals, and looking forward to earnings season in the next few weeks. What didn't work? It's still a rough time for value companies without catalysts. I made a change in my strategy in 2022 where a cheap valuation is no longer enough to justify investment. I now demand some action like an opportunistic stock repurchase or sale of an underperforming asset when I invest. Companies with cheap stock prices have stayed cheap in the past 5 years, and value investors who have not adapted have suffered. Next up is on the hunting trail for value. I have been screening for cash flow over the past few weeks, and I have found and invested in several companies with over a 10% free cash flow to market cap yield. In a world where capital is desperate to be invested in the hottest technology stocks and nothing else, opportunities exist in less exciting companies. In my opinion, you are getting much more for your money in value companies, with a 10% free cash flow yield giving you up to 5 times the amount of cash flow in 1 year as some of the momentum names. Even if a momentum company doubles its cash flow in year 2 or 3, it will be difficult to catch a growing value company given the valuation difference. Think about it. In year 3, a value company will have produced over 30% of its market cap in free cash flow, whereas a high valuation momentum company only around 8%. We can even compound the difference further along the way if some of that 30% is returned to us in dividends by reinvesting the cash. I have had plenty of success over the past 5 years running this and other value playbooks, and thanks to the excitement on AI, plenty of opportunities still exist in value. Wrapping up, the AI trade seems to be struggling under its own weight. Either the valuations come down and AI investors suffer, or the AI companies themselves will continue to take advantage of high valuations by raising more capital. Either way, I believe leadership is changing and returns in momentum will be muted going forward. Value companies producing lots of free cash flow have an advantage here if they use their cash to reduce the number of shares and reward shareholders in a way momentum valuations currently prohibit. Have a great weekend and thanks for listening.
Performance data quoted represents past performance and does not guarantee future results. The investment return and principal value of an investment will fluctuate so that an investor's shares, when redeemed, may be worth more or less than their original cost. Current performance may be lower or higher than the performance data quoted. You may obtain performance data current to the most recent month end by calling the Frank Value Fund at 1-888-217-5426 or visiting our website at frankfunds.com. Returns include reinvestment of any dividends and capital gain distributions. Non-FDIC insured, may lose value, no bank guarantee. The fund's investment objectives, risks, charges, and expenses must be considered carefully before investing. The prospectus contains this and other important information about the fund, and it may be obtained by calling 1-888-217-5426. Please read it carefully before you invest or send money. This publication does not constitute an offer or solicitation of any transaction in any securities. Any recommendation contained herein may not be suitable for all investors. Information contained in this publication has been obtained from sources we believe to be reliable, but cannot be guaranteed. The information in this publication represents the opinions of the individual portfolio manager and is not intended to be a forecast of future events, a guarantee of future results, or investment advice. Also, please note that any discussion of the fund's holdings, the fund's performance, and the portfolio manager's views are as of the recording date and are subject to change without notice.